Hello friends, this is Raj Sastry from Raj Option Trading. Today is September 13, 2021. I want to talk about stock and option trading ideas for the week of September 13, 2021. With that, let's jump in, get started. So we will look at a Ttm Squeeze indicator from John Carter. So this will help us to identify what stock to buy, what call options or call spreads to buy. So with that, here we got top 15 stocks that we can look at and see if we can buy them. So top of the list we got SOS, a China-based company. Stock price is $2.80. As you scan through here, institutions are buying SOS as of now, and they got very good 1 year sales growth, as you can see here, 53%. And in the TTM squeeze by John Carter, there is a 3-day squeeze on SOS here, and they got low volatility, which is 28%, and momentum is gaining. As you can see here, RSI is now 52. So I think that makes it the ideal candidate. As you scan through this here, stock also has a high short ratio of 13%, and they are getting a bounce here in 1 day. That tells you stock is now moving. They're trying to go up as you speak. And as you look at the 5-day here, negative, 10 days positive. So slowly we can see the momentum gaining in the SOS. That's why it showed up in the TTM squeeze indicator. So I would be willing to venture slowly into SOS and buy a small position and take it from there. And then we got Bank of America. It's a $40 stock. I think bank stocks will get the advantage if there is a rate increase by federal government, and they will make some good money. So with that, Bank of America is a $40 stock. As you can see here, the sales growth is negative right now, as you can see here, quarter over quarter, as well as 1 year. And as you scan through here, RSI is 46, low RSI. IV percentile is also low, which is 32. And they got a 1-day squeeze in a 1-day chart here. And as you scan through here, stock is not doing well at all in 1 day, 5-day, and 10-day. I think this could be a turnaround candidate. I think we can slowly buy some Bank of America at these levels. They're still down, they're still up for the year, as you can see here, 64%. I think it's a good one to buy slowly into this weakness. And then we got one of my favorite here, Neo, Chinese Tesla, $37 stock. Anytime this stock is below $40, it's a good buy. So as you scan through here, they got a nice strong fundamental here with the quarter over quarter positive sales growth and also positive 1 year sales change and nice gross margin. And this also, as you can see, RSI is low, IV percentile is very low, 6%. And there is a daily squeeze, as you can see here. So as you can see here, stock is down of late, all the way from 1 day into 6 months, and done nicely in 1 year. So I'd be willing to buy Neo at these levels and wait for a nice turnaround. And then you got here, if you are a gold person, you could also buy some gold here, GDX. As you can see, a GDX ETF, it has a low RSI of 41 here, I mean relatively low, and a low IV percentile. Gold has been down of late. I think it's good to buy some GDX into this weakness. I think we can see a good appreciation. And then you got here one more bank here, Citigroup, same story, weak of late, low RSI of 26. And then we got a couple things I highlighted here, ChargePoint, Humanig, which came down big time, and Coca-Cola, and so on and so forth. So we look at this into a little more detail and understand what we can buy now. So with that, let's jump in and get started. And you might wonder what's a TTM squeeze indicator and TTM wave. I will not spend too much time. I got a segment on this. You can look through here. In short, we got a squeeze indicator, which is right here. Whenever you see a red dot here, that tells you right now there's a tight compression of volatility, and the stock has to shift and go up or go down pretty quickly. And as the squeeze happens, indicated by red dot, red dot tells you there is a tight compression of volatility and Bollinger Band is within the Kelton channel. And we can also look at the short-term wave and the long-term wave. When the squeeze is formed, if the long-term C wave is above zero, that tells you can go bullish and buy some call option or stock up outright. So as you can scan through here in this chart, we got squeeze forming in a 2-day or 3-day chart. 3-day chart here. When the squeeze is forming, the longer term C wave is above zero. That's a bullish sign, and you could buy, call option or a stock at that time. This is for the illustration only, not a recent chart of cliff. But we will look at some charts as we go forward. So with that, let's jump in here and look at few stocks here. So as you scan through here, some of the stocks are not suitable for everybody. For example, we got FAMI and EEENF. Some of these are very low price stocks, penny stocks, not suitable for everybody. I would say, if you're a, if you are trying to venture out, don't start with the penny stocks. Instead, look at a little more stabler stocks. What I've done is I've highlighted some stocks which are good to buy. For example, we got SOS here. The reason this is highlighted is we got a low RSI, which is 52, and also we got insiders or institutions buying SOS at these levels. That's why it's highlighted in gray background. And then you got a couple more highlights. I would say, look at the stocks which are highlighted either in the green background that tells you, these are strong candidates when it comes to fundamentals and satisfies the rule of 40, being quarter over quarter sales growth plus gross margin greater than 40. Or, there is a good institutions or insider buying and low RSI. So you could look at the highlighted stocks here. So what we'll do is we'll look at few of them, and you can look through this in detail. First, let's look at SOS here. Looks like institutions are buying SOS, as you can see here. And as you see here, we got 1-day turnaround in SOS, and also in 10 days they're showing some momentum. So we want to identify these candidates which are beaten down, in this case 80% down from 1 year 52-week high, and showing some progress now. So with that, let's jump into TD Ameritrade Thinkorswim platform and see if it's worth buying SOS. So SOS, as you scan through here, I will go into a chart here. As you scan through SOS here, stock has gone as high as $15. Right now it's stuck in $2.80 for a while. Look through here on the balance volume is pretty steady here, and RSI is trying to pick up as we speak. That tells you momentum is there with the stock right now. And in the DMI indicator, that tells you stock is bullish. As you see here, we had a bullish crossover where the blue line is going over the red line, which is a bullish indication. And also as you scan through, implied vol is low. That's what we want. And check-in money flow is showing money is flowing out of the stock at this time, which is also okay. I mean, not great, but it's okay. So with that, let's jump in and see a TTM squeeze chart. So I'll go into the TTM squeeze chart here. As you scan through here, it's a 1-day, 1-year chart. Tells you a little bit shorter term. As you scan through, we got a squeeze forming in a 1-day, 1-week chart. When the squeeze is happening, and we got shorter terms A wave, barely above 0.021, and longer term A wave, C wave is below 0, minus 0.68. So as you see here, I think there could be some improvement if you look at historically. After a bunch of light blue, we have dark blue, then it went up. So I could see something similar here. I would slowly accumulate some SOS. SOS being a low dollar stock, you could buy that outright on any down day. And we got also a squeeze forming in a 3-day chart here. and as you can see here, there is some improvement. It's turning from light blue to dark blue, and there is some improvement here. And shorter term A wave is above zero. That tells you it's a positive here. And we got a squeeze forming in a monthly chart here. As you scan through here, right now A wave is above zero, but it's red, meaning trending a little bit bearish. But longer term C wave is right now it's below zero. So here, if you're buying SOS here, you are a contrarian. There is no clear sign, from Ttm squeeze indicator from John Carter, but you're anticipating the stock will go up. Given we saw through these indicators. So with that, what we could do is we could go to option chain, and actually you could buy the stock outright. We don't need to go to options here. Being a low dollar stock, you could just buy the stock outright and go from there. I think this is a good one, and you could go from there. So as you see here, the reason we are buying SOS is because there is an institution buying interest here, and there is a lot of volume going into SOS. The way I've sorted these stocks is really the stocks at the top have got highest volume as of last Friday. That's why they came on top. So I would initiate a small position here for SOS and take it from there. Next, we got a couple more here. We got ABAV. You could do this. You could do something similar here. Stock has been dropping off of late. Low RSI, 37, and low IV percentile. And one I would look at is NIO here. NIO is American Tesla, as many of you know. $37 stock here, and nice sales growth as you can see here, and also a low RSI 41 and very low IV percentile. That tells you volatility is compressed to a great extent in NIO, and stock has to really go up or down pretty quickly. So with that, we'll jump into NIO here. Let's see NIO. So as you scan through NIO here, let's go into this chart. And NIO, as you can see here, nice looking chart here. Of late, stock has been in the trading range for a while, and on the balance volume is pretty steady, I would say. RSI levels are very low, and right now stock is bearish, given the red line is above the blue line. From a DMI perspective, chart is bearish, and as you scan through here, low IV, and also check-in money flow is not great. So with that, let's jump into TTM squeeze chart here and see what we can make out. From a TTM squeeze chart perspective, we got a red dot forming in a one-day chart. So as the red dot is forming, as you scan through here, the shorter term A wave is above zero. That's a bullish sign. And the longer term C wave is also above zero, 0.49. That's barely above zero. I could see a wave trying to go above zero. That's why you see dark blue here. That tells you there is some strength. As you see dark blue on the lower side, that shows the strength. Darker blue on the higher side or above zero, that shows weakness. So I see some the stock strengthening at these levels. Given stock is dropped off here, I would be a buyer of NIO at these levels. And then as you can scan through here, I think there is no more squeeze in the other charts here. So I would buy some NIO, take advantage of this weakness here. So with that, let's jump in here. We could go to option chain here and NIO. So NIO is a $38 stock. It went as high as $66, as you can see here. So if you're a stock trading person or investing person, you could buy NIO outright at $38.10. But if you want to play options game, you could go here, maybe 95 days out here, or even higher if you want. 130 is even better. Let's start with 130. And you could go delta 70, which is right somewhere. Delta 75 is good. You could pay $8.60 and buy some NIO call option and confirm and send. So as you scan through here, you'll break even if NIO stock goes above $40.60 by by 21st January, and your max profit is infinite as NEO moves up. As NEO moves up by $1, this stock option will go up by 75 cents because delta is 75 here. And as you scan through here, you're paying $8.60. That's your max loss. So with that, you could confirm and send this. I think it's a good play. But if you don't want to play a single leg, you could do a spread also. If you want to buy spread, it's a $37 stock. You could do something like 30 45, which is a $15 spread, or you could even do maybe 35 45 could be also a good one. So let's start with 30 and 45 to begin with. So if you do 30 45, so it's a $15 spread, as you can see here. You're paying $7 here. Remaining portion of $15 is your profit potential. So you are actually making more than doubling your money. So with that, if you do this, your max loss is 723, as you can see here, and your max gain is 777. If the stock is above 37.23, which is below the current stock price, you'll break even. So with that, you could confirm and send this and take it from there. And if you don't want to spend too much money on NEO spread, you could even do 35 40 spread, just a $5 wide spread. That could be a good one. So if you do that, you could do right here 35 40. There you go. So if you do that, you're paying $2.45, and remaining portion of $5, which is $2.55, is your profit potential. You could confirm and send this. This is a good play. I would say you could either do this spread if your trading account size is limited, or you don't want to take too much risk, or you could do outright. I would even recommend doing outright 70 delta, and go from there. That will put you right here. You're paying just $8.60. That's also a good play here. So with that, let's look at one or two more. Going back here, we got a couple more here. As we scan through, we looked at NEO. You could also look at ABAV, same story. And we got two more here, ChargePoint and Humanigen. Humanigen stock is dropped off like a rock last week, especially by FDA news about not approving their drug. Right now, if you want to buy Humanigen, you are a contrarian because chart is ugly. You're buying, regardless of what chart tells you. Let's look at HGEN here and see what we can make out. All right, so Humanigen, as I look at chart here, very ugly, like I talked about. Chart is telling you, hey, it's a dropping off big time after the FDA says, their drug is not approved. And as you see here, stock dropped off from on the balance volume. Folks are buying stock, anticipating, everything will go well and they get approved. But afterwards, stock came down, very typical. And RSI also dropped off, very low RSI in a long time. And DMI tells you it's a squarely bearish here. The red line jumping over and blue line coming very much down, and a huge range, or a huge gap between the red line and the blue line, squarely bearish. And as you can see here, check-in money flow is telling me something different. It's telling me smart money is jumping in and buying. So that's why here you got to be a contrarian. I love being a contrarian. I would buy some of HGEN, Humanigen at these levels and take it from there. So let's now look at Ttm Squeeze Chart here. As we scan through here, we got a squeeze forming in a monthly chart, and we got a dot here. Look what's happening here. So when the dot is formed here, longer term C wave is above, it's actually below 0 -1. So that tells you right now at the present in the weekly chart, it's telling you it's bearish right now, and it's telling you don't buy. But as you look at the monthly chart here, we got a squeeze formed here, and right now in the monthly chart, the line, the C wave is above zero. So I would, it's actually 10 points, something a little bit weaker right now. But regardless, being a contrarian, I would just go and buy some Humanigen at these levels. So with that, let's go into a chart options chain here, and it's a $6.68 stock. I would recommend buying the stock outright, but if you don't want to buy outright, you could go into 58 days out call option, and you could buy delta 70 or so. I think 78 is good. You can pay $3.30 and buy some Humanigen here, and as you scan through here, you're paying $8.30. Sorry, you are paying $3.30 here, $3.30, and you'll break even if the stock goes above $8.30. I think it's a good risk reward. You could go with this. And if you don't want to do that, you could also do a spread here. Stock being at $8, you could do 5 and 10 spread. If you do 5 and 10 spread here, there you go. So you're paying $1.55, remaining portion of $5, which is around, say, $3 or so is your profit potential. I think it's a very good, very good trade-off here. You're more than doubling your money. So as you see here, you're paying 150.55 to make 345. Your break-even point is 655, just below the current stock price. Little conservative play. You could play this game if you don't want to allocate too much capital, towards this stock here. It's a good risk reward here. So with that, let's jump into one or two more. We got a lot of stocks here. I will not cover them. I will let you go through this and take it from there. And let's look at next chart here. We got a couple more here. As you can scan through here, we got some of the energy names like Devon. As an example, Devon right now, RSI is low, IV percentile is low, pretty much compressed from a volatility perspective, and there is some improvement in one-day chart. That's why I see there's a turnaround with the Ttm squeeze indicator telling you there's a 1 week squeeze here in a weekly chart. I would initiate a small position here. Same is the story with the ConocoPhillips. Again, one more energy play. As you can scan through here, nice sales growth here, and there is a weekly squeeze in the Ttm squeeze chart here, and there is a turnaround in one-day chart. That also tells you the stock might be making a comeback here, and stock has done okay for 1 year, 76%. And then you got your CTRM, one of the meme stock, jumps up and down. Good from a sales growth perspective or a revenue growth perspective, and also nice institution volume here. So there's a squeeze in the monthly chart, and as you can see here right now, it's a negative from a 1 day, 5 day, and so on and so forth. But you could slowly buy into this and hold it for a while. This can turn around, given there's a good fundamentals here. And also as you scan through here, IV percentile a little high for me, but I think you could buy slowly into this negative or a weakness. And as you scan through here, we got a couple more here. Farfetch, AES, DBX, which is Dropbox. As you scan through them slowly, look at the IV percentile, very much compressed here, meaning it's there is a lot more room to run. So what I would do is I will look at some of these stocks here. Given there is a squeeze in the daily chart or a monthly chart, I would slowly initiate a position here and take it from there. And you could look at other candidates here, GSK, Fast. So for example, for this instance, let's look at Fast here. It's again, as you can see here, low RSI, and there is a weekly squeeze here. So as I go into Thinkorswim platform here, FAST, Fast and Neil. So as I go through here, let's go into this chart here. A nice on the balance volume. I love this on the balance volume here. RSI is dropping off big time, given stock is dropped here, and volatility is increasing at this time. Its IV is about 36 or so, and as you can see here, check-in money flow is also negative right now. So let's look at um, squeeze chart here. As you can see here, stock has done nicely. Squeeze forming in the weekly chart here. When the squeeze is forming, longer term C wave is above zero. That's a bullish sign. So what you could do is you could go into option chain here. You could buy the stock outright. Stock is at $53. All-time high is 56. There is some more room to run. If you want to buy options, you could do a options delta 70 outright. Right somewhere here 69 is good. You can pay $5.80 and do options outright. So if you do that, you'll break even if the stock goes above 55.40 by January 22, and your profit potential is infinite. Maximum you lose is $580. But if you don't want to play single leg option, you could do 50-55 spread. So if you do that 50-55, so that will let's see here, you could do right here 49.6 and 54.6. There you go. So you pay $3 to make $2. Not a great risk reward here. I would probably pass this up and rather do a different spread here. You could do 50, let's see here, maybe 47, 57 spread here, $10 spread. There you go. So you're paying $6 to make $4. Again, not a good risk reward. I would pass up. And next we'll look at next chart here. As you see here, we got some more here. There are a lot of great stocks. As we look through, we got COS, BRFS, CNK, Digital Realty, and so on and so forth. And watch the IV percentile. You want to pick up low IV percentile candidates so that way you don't pay too much money to buy some of these call options. And let's look at one more chart here. We got a couple more here. As you scan through here, look at some of these. For example, DFS. I like the setup here. We got a squeeze in the daily chart as well as monthly chart, and stock is turning around in 1 day chart. That tells you, stock is trying to turn around here. So we should look at DFS very quickly and take it from there. So DFS, as you can see, a nice looking chart, great bullish. Off late, they're getting a little bearish territory. Nice on the balance volume. And right now, as you can see here, RSI is low. That's when you want to buy. And right now, they're bearish. Red line above green, blue line here. Check-in money flow tells you money is going out of stock, which is the case when stock drops like this. So if you go to Ttm Squeeze Chart here, as you can scan through here, we got a squeeze forming in a 3-day chart and also a weekly chart. When the squeeze is forming, the longer term C wave is above zero. Same story here. Coast is clear. You could buy a call option or stock outright. If you want to buy stock outright, you could buy here by clicking on ask. And right now $122 went as high as 135. So if you want to buy options, I would say 130-day out is great. So I would do delta 70 here, which is right somewhere 69 is good. You could pay $16.30 and buy this call option here, and break-even point is 126, $6 above the current stock price, and you'll maximum loss is what you pay, which is 1630. So this is one way to play, but if you don't want to pay too much money here, you could do a spread here. Stock being at 120, you do 115 and 125 spread here. So if you do that, it's a $10 wide spread. you're paying $5 to make $5. You'll double your money. So as you see here, you pay $5 to make $5, or you pay $500 to make $500, and your break even is 120, which is below current stock price. A little bit conservative strategy. You could confirm and send this and take it from there. And we got more here. As you could look at these stocks here, and we got one more slide here with a couple more names. As you can scan through this, we got a lot of great stocks here. Chegg as an example, online education within USA, low IV percentile. That's a good candidate. As you scan through, look for the candidates where there is some turnaround in 1 day, 1 week. As an example, right here, CCOP. As you can see here, it's a $6. Sorry, CCOP is a $1.09 stock. There is some turnaround in 1 day chart here. Actually, there's no turnaround here. You could even look at stocks like DRI Darden, which is a restaurant chain. Great stock. You could look at some of these names here, and also look at Holy Frontier Energy. There is some turnaround in the shorter term. That could be a good one too. And also pay attention to short ratio. The stocks with a high short ratio can give you an outsized return. Look at those two as an example. ARI, we got LW, and even Inseego. There is a high short ratio here that can create a short squeeze. So you could look at some of those names here and take it from there. If you're an options person, pay attention to IV percentile. When the IV percentile is high, like ARI and AHCO, and even this one here, you could sell some premium and make some money that way too. And thank you very much. Happy investing and trading. Please subscribe.